Hey folks, Dan Frio here with your opening bell for April 17th, 2025. We're going to talk what's going on with mortgage rates. They're going to come down maybe a little bit more today. We're going to look at the pattern. Will that pattern continue? That's what we're going to talk about. Headline news that we're looking at right now is Trump just can't stand the federal chairman. I'm going to kind of give you some ideas why, because the last time he called it was transitory inflation and it wasn't. Now he's saying it's inflation, but it might be transitory. Whole bunch of things we're going to discuss there. How the stock market's reacting to the news that we're seeing today. It looks like United Healthcare has taken a toll on the Dow Jones. Across the board is in the green. Well, that's good news there. We have the MBS is up one tick. I'd rather have it up one tick than down one tick because I'll explain to you how this works and how this affects your mortgage rates. And then we're going to go over the economic calendar for today. So let's get over to it. My name is Dan Free. I do this report actually 2 times a day to inform you what's going on with these things and the whys behind it. So if you're looking at my videos, you're probably trying to buy that first house, maybe an investment property, or looking to refinance your current home, or just trying to understand the business. I'll give you all my information at the end of this video so you can reach out to me, because our slogan here is one application, one credit pool. We're going to shop your loan over 30 different lenders. Now, how do we do that? I'll give you all that information at the end. So please stay tuned to the end of this video. But without further ado, let's get to it. So here's what we're seeing in the markets right now. Powell's termination cannot come fast enough. So Powell is the Federal Reserve chairman, and him and Trump just don't get along. He's saying, well, this time he should be cutting rates. Last time when it should have been increasing rates, he waited too long. And now he should be cutting rates and he's waiting too long. And both of those were because it was transitory. So last time Powell was wrong. And this time, is he going to be right or wrong? Well, only time's going to tell. But you also see down through here, Lilly soars, stock soars as weight loss pill results fantastic. Trump hails big progress with Japan talks. That's good news over there. Spirit Airline, let's see, something Street quarterly jumps 39%. So you're seeing a healthy market throughout this. Let's get over to see what the Dow Jones and the equity markets are doing. Across the board, we got green all the way over here, but we got red right through here. But the one thing concerning me right now is oil. It's at $63 a barrel. It was $58 a barrel last week. Why is that going up? Well, we're going to focus in on that. But the Dow Jones is getting hammered right now because of United Healthcare. You take that out, not as bad of a day as you look across the board. So let's get over to the MBS market. This is the bond that we follow. This is the bond that you should follow if you're trying to figure out what's going on with mortgage rates. Don't follow the 10-year Treasury. Don't follow anything else. Watch the MBS market. So this is what this is telling us. All the other markets basically tell us what the yield is. This tells us what the price is. So I have to explain to you how this works. So this is the bond for mortgages. So as this bond price goes up, which you're seeing right through here, that means rates are coming down. There's a flip-flop effect. So just take this, reverse it, and that's what's going on with mortgage rates. Well, it's up 1. It doesn't really do anything for us, but I'd rather have it up 1 than down 1. You go over to here. Here's a 2-day chart. Look at this thing. It was up and away, and then it came back down. Look at this 5-day chart. This is nuts. So people lock down here. You got to remember, as this goes up, rates are coming down. This is probably 3/8, maybe a 0.5% cut in rates. So if you locked about 2 weeks ago, I need you to reach out to us because we might be able to get you a lower rate, or check your lender, see if they can get you a lower rate. But if you're stuck, reach out to us. We'd love to help you in this context. But I want to go over first of, some of this issues. Here's a former Fed official. This is her take on what should the Federal Reserve be doing right now. Let's see what she has to say. And I'll give you, if I agree with her or not. Then when we come back, we're going to go over the economic calendar. What we got today is the unemployment numbers. It didn't look so bad. We've got building starts. They're dismal. So if you want housing prices to stabilize, you need more homes. Well, the building permits aren't showing it right now. But first off, let's get over to this so we can see what former Fed official, and she probably works at an MIT, she's a dean at some MIT or a professor at some MIT company. They all are, all those Fed officials. Let's see where she works, but let's also see what her take is on what's going on behind the scenes with Trump and Powell. Take it away.
Fed President Loretta Mester. She's now a professor at Wharton and a CNBC contributor. I guess I knew that, Loretta. Congratulations. Did you send out announcements? That must have been
highest achievement of my career.
You sound a little bit I won't say sarcastic, but tongue in cheek. You think we ought to cut, Loretta? Do you think we've had a couple of money guys on that I respect their opinion. They didn't dismiss it out of hand. That maybe we are too tight. There's so much uncertainty, and maybe this time inflation really is transitory because it's just a one-time thing with tariffs.
Yeah, so I think you pointed out sort of the tension right now in that we just don't know whether the tariffs are going to be a one-time price increase and therefore not really be inflationary for a long time. And we don't know really where things are going to land, so it's hard to evaluate what the growth implications of the tariffs are going to be. And remember, there's other policy changes coming later in the year. If you think about tax cuts, they wouldn't be weighing on the economy, they could be buoying the economy. So I think it's right now to think, if you're at the Fed, what can you do with your policy tools to ensure that the increase in the tariffs don't become a more permanent or more persistent increase in inflation? And what they can do with their tools is to make sure that inflation expectations don't get out of control. And this is usually the medium and longer run, which is what the Fed's focused on. So that, I think at this point, what they're doing and what they're explaining and communicating is the right policy. Look, we're going to sort of make sure that we can keep inflation expectations anchored. That's going to help in terms of making sure that tariff increases, price increases don't become embedded in the economy and persistent inflation. And we're also going to keep in mind our other part of our mandate, and be prepared if it does seem that, the employment part of the mandate is getting farther away and things are weighing on the labor market in a way that's a material, downside, then we're prepared to do what we have to do. But right now, we don't know the size of that. We don't know where the tariff policy is going to land. And so right now, what they're doing is weighing those two and trying to do what they can do with their tools to ensure that inflation remains under control.
So we'll keep it at that. So one of the big key points that she said there is there's a lot of ifs. If this and if that and if that. So let's look at this. She mentioned the jobs report or the unemployment numbers. So let's get over to Rick Santelli, because we actually had these numbers come in today. And I don't like doing this. I don't like playing two videos at the same time. But this actually goes right into the wheelhouse. We're going to talk about, is it going to be transitory or not? We don't know. But let's look at it this way. The federal funds rate, the rate that the Federal Reserve controls, is 4.25 to 4.5. We have inflation, and you can debate it, but the high end of it is probably 3, 3.1, 3.2, 3.3. So there's a big spread there. The difference between, let's say it's 3.25. Well, you have the federal funds rate of 4.25. There's about 1 full percent the Federal Reserve could cut. That could help out tremendously. So, let's get over to the jobs market real quick with Rick Santelli. Let's get this breaking news that we saw on the jobs report and a little bit of data that he has. This ties right into exactly what she was talking about. So let's see what he has to say with this breaking news.
Seconds away from jobless claims and housing starts. Oh my God, be still. I'm beating hard to.
So we get both of these housing starts that we just talked about and the jobs numbers. So let's take it away.
There's the futures down another 600. Tough session yesterday. Rick Santelli standing by at the CME in Chicago. Rick, the numbers, please.
Yes, let's start out with initial jobless claims, shall we? We're expecting a number around 225,000. It comes in on the light side at 215,000, and that ends up being down 9,000 from 224,000, a slight revision. We continue to be so well behaved in initial claims, really for years. Just consider we haven't been over 250 since October of last year. Continuing claims, 1,885,000. That is a little higher than expectations. We did see a subtle revision lower in the rearview mirror. But once again, the 1.9 million that we've reached several times have been revised away. The last time we were above 1.9 million, you're going back to November of 21. All right, let's look at housing starts for the month of March, expecting a seasonally adjusted annualized unit pace of 1,420,000. It comes in light, 1,324,000. And that would be the lightest, going back to November of last year when it was just a whisker over 1.3 million. That makes it from 1,501,000 last look, down about 11%-ish. On the permit side, a little bit better than expected. So what may lie down the road is a bit better than expected, but I do caution, permits are a little hard to qualify and quantify. So these actually now become preliminary March numbers at 1,482,000, and that would be the best level. It would equal these in November of last year. We were a smidge higher. And finally, the last numbers set that we have before the holiday closure tomorrow will be Philly Fed on the business.
We don't need to know that. So what did we find just now? The unemployment claims actually came in a little bit better than expected. That's not bad. That's good news. We had great news on the jobs report. That's fantastic news. We're having great news on the inflation front. The tariffs are the thing that's really thrown the markets on their ear. So that's the main focal point. Let's get over to the headline news that we have. This is basically the data that came in today. We're going to tie this in to all the other things. So we have building permits. They were basically right in line. Continued jobless claims. Look at those. Those were right in line. Housing starts down 11%. This is crazy. If we need housing prices to come down, if you want housing prices to come down, we need more inventory. And initial jobless claims at 215, expected at 225. So that's coming in much better as well. So basically all the data through here, I'll give it a thumbs up. So it doesn't look like the world's ending there. And that's basically our report for today. So the calmness, hopefully the calmness will take over, because right now the jobs numbers don't look bad. We have inflation on everything other than tariffs coming down. And the markets, we have a lot of earnings season. I did a report last night on that. We have probably 90% of the earnings that are coming in from companies are actually equal to or beating expectations. I'm liking this market, folks. So remember, the media, they need they need a shock and all. That's why they're trying to get you. How about those videos? The market's going to drop, or the housing market's going to drop 80%. You click them because you're interested, and then you watch the data, and it's like, what in the world did they just say? So that's why I try to help you understand all these markets in my daily videos that I do. So just check them out each day, where we talk about interest rates and the things that will be affecting those in real estate. So my name is Dan Frio. I do this report actually 2 times a day. Who am I? What do I do? Well, don't turn that dial just yet, because here's the juicy part. I'm actually a federal loan officer. What does that mean? I'm licensed in all 50 states as well as Puerto Rico. I'd love to help you if you're looking to buy or refinance. Here's the other piece of this puzzle. We have a slogan: one application, one credit pool. We're going to shop your loan over 30 different lenders. How do we do that? Well, it's simple. My bank, the bank that we work with, I'm helping them create this system and grow it. Right now, we have 33 other lenders that we're working with. What does that mean to you? Well, by applying right through here, the rate update, you're going to put in your application. I'm going to have the opportunity to work with my bank and 33 other banks to find you the right program, the best rate, and the lowest fees in the market. So check it out. Go to therateupdate.com. Right over my head, you can put in your application, that little black button right up through there. You can also schedule a call with us right here, schedule a one-on-one consultation. You can give me a call, or just call in the office at 844-775-5626. We revamped the website. Check it out, folks. It's pretty cool. I'm updating it daily. So here's what we got. Right now, the main product we have, what we're helping you with, is the RateWatch tool. So if you're a current homeowner and you want to track rates and not miss that rate drop again, if you're looking to refinance, check this out. It's going to show you a video and how you register to put in your information, so it'll trigger me to trigger you when that rate hits exactly where you're wanting it to be. Then we're adding it, we'll be scrambling these around, but right now, here's what we're looking at. If you're looking to buy that first house, if you're a veteran looking to refinance, or you're a disabled veteran, or you're trying to just understand reverse mortgages, FHA, and just understanding how credit works, our website's going to offer you that, as well as check out my YouTube channel. There's over 3,000 videos there to help you out. So my name is Dan Frio. I do this report 2 times a day to help you guys out. So thanks for watching. I hope you learned something today. If you haven't done yet, please do me one favor. One favor I'm going to ask you. Click the subscribe button over there. I'm trying to hit 50,000 subscribers by the end of the year, and only you can help me. Thanks for watching, guys. God bless. Have a fantastic day. If you need some help, please reach out to me. Send me an email. If you have comments, leave the comments down below. But if you really have a question for me, my email's down below. Check it out. Send me an email. I'd love to answer any questions that you have. Thanks for watching, folks. God bless. I'll see you at the closing bell. See you then. Bye-bye.